Good afternoon, guys. Thanks for coming out. Appreciate everyone putting on the conference. So, we are Magna Gold, and our tagline right now is we're creating Mexico's next mid-tier gold producer. But I think more fittingly, it should be the 70 to 80,000 ounce per year producer you've never heard of, and we'll walk you through that. Just some legalese, I suppose. Fundamentally, our strategies over the next near term is by 2023, we'd like to be a 200,000 ounce plus per year producer with 5 million ounces in resource and reserves. As it stands right now, we're a third of the way there with the current 80,000 ounce per year run rate at the San Francisco mine, coupled with 1.5 million ounces in resources that we do have. So, we have been delivering on that, and I don't see the 2023 goals as unachievable. This is our management. We're a Mexico-based management team. I think part of what allowed us to have this rapid turnaround at the San Francisco mine was we are the original team that built the San Francisco mine, so we knew it better than anyone else. Our board is rounded out with a lot of technical direction, and Laura Diaz was the former Minister of Mines, so we do carry a lot of cachet in Mexico, and I think that really gives us that operational edge there. In terms of our cap structure, we haven't done we haven't had to raise a lot of equity apart from the original go public transaction. So very tightly held share structure. In terms of our ownership, we do have the traditional gold investors that own our stock, but I think, looking at this shareholder registry, I think Payal de Mexico is actually, in my opinion, it's our mining contractor and it's our most important shareholder. I think that just gives you an idea of how aligned everyone is, from the people that work there on site to, board and management. Did you really come to a mining conference if they didn't tell you we're trading at a discount? So we'll just skip right through this. Yeah, we're cheap. You should buy us. In terms of the Magna Gold, we have a portfolio of 7 different assets. However, as a management team, being a producer, we wanted to figure out the best way to deliver value. So fundamentally, each project, phenomenal upside, but we focused on improvements at the mine and the Margarita project. So this presentation will deal based on what our 2 top priorities are and our deliverables. This is the San Francisco mine. This is just a plan view of our operations. It just gives you a sense of how close we are to infrastructure. What you're seeing, that international highway, we're effectively an exit off that highway. We're about an hour and a half from the United States border, about 2 hours from Hermosillo. Hermosillo as a town has all the majors that are operating in Mexico have a presence there, as well as contractors and suppliers. The San Francisco mine, these are the mineral reserves and resources. The 750,000 ounce in reserves, that's based on our current mine plan. The 1.4 million ounces measured and indicated resource, that is what we hope to convert through our ongoing 30,000 meter infill program. This is just a summary of our current mine plan. We are doing 70,000 ounces a year, $1,160,000 cash cost, $1,204 AISC. We just completed our first quarter last quarter. So Q3 of this year was our first full quarter, and we came in actually under on the cash cost at $1,134, and we produced 19.1 thousand ounces of gold. So again, our run rate is in fact ahead of what the current mine plan is. We will be looking to complete that 30,000 meter infill program and release an updated mine plan sometime in the next year that envisions 100,000 ounces of production over the next 10 years. This is just a picture of our ramp up. In terms of, for us, one of the things was, we always look at other people's largesse as our opportunity. The previous operators of this mine, there were certain things that were done differently that didn't really lead to results. We managed to correct all of those when it came to getting the recoveries up, optimizing grind size, optimizing all the operations. And that leads us to where we are now. So where we once came from to where we are now, the blue line is the strip ratio. The orange line is our production. And we have managed to bring the strip ratio from 8-to-1 when we inherited the mine down to our life of mine average of 2.5. And we should see continued improvements as we move forward. This is just our daily performance and what we project moving forward based on the current mine plan. This will also be updated in the new mine plan, but as you can see, we are actually hitting at all these metrics. And As it stands right now, the current run rate is about 6,500 ounces a month. We will close the year out at about 7,000 ounces. And, in terms of, just to give you another sense of our team and what we were able to do, we originally built this mine, and under our administration, this mine, which, considerable questions based on, the stripping and the various operating metrics, we took this mine and generated $100 million in free cash during our tenure, and we hope to bring it back to that level of production again, if not higher. August of this year actually ranked as one of the most productive months in the history of the mine, even going back to our original go at this. In terms of what else is there at the mine, the 30,000 meter program, we hope to convert that 1.5 million ounces of resource into reserves. Everything is a function of drill density. As you can see, there's significant areas where the drill density just does not support reserves. That will be addressed in our current program, and as we said, next year we should have a new mine plan. In terms of, the upside, we found the mineralization at San Fransisco. It occurs along the margins of mag anomalies where there are cross-cutting features going through there. We see a repetition of that pattern over a 10-kilometer mineralized trend leading from San Francisco to El Durazno. We have a couple projects in there near mine. We anticipate adding resource, and the Veta Tierra prospect that we have, we envision about 250,000 ounces of additional resource there, which again, that would be tacked on to the end of the life of mine. And that's the mine. And our second priority that we have right now is the Margarita Silver project. As a management team, again, we were really focused on building value for our shareholders, and as a production story, oftentimes exploration results just kind of go by the wayside. So we wanted to come out with an economic study. We acquired the Margarita Silver project from Sable Resources. They'd done a phenomenal body of work. It was extensively drilled. They had identified mineralization. Samples were there for met. Just was never put together. So we took this on, and we figured that we're going to put out the first maiden resource and PEA. We've kind of got a sort of a chant at work. We call it the PEA by PDAC strategy, but really by the end of Q1, we should deliver that first economic study. The reason we think that's something that adds value is, depending on where the stock is trading at those metrics, we can actually point to a tangible number, be it $100 million in NPV, discount that back to where we're trading. That's a real value proposition. In terms of where Margarita is, we are surrounded by Gatos Silver's Los Gatos project. We're a low sulfidation epithermal system. Like I said, the guys at Sable did a phenomenal job of drilling this off and identifying that mineralization. Just to give you a sense of the drilling that's come out of there, this has been drilled down to about 150 meters, not so historically, in the recent history of it. But what's really interesting here relative to what you see at Gatos Silver is this is a precious metal rich zone. We're not getting that base metal enrichment that they're getting at Gatos Silver, which leads us to believe that we are actually on top of that base metal system. We believe that we can drill at depth and identify that same base metal rich horizon, which we believe has been eroded away at Gatos Silver. So for us, I think, it's a huge driver of economics to have that precious metal zone in concert with the base metals. What you're seeing here is we just did a 30 gram cutoff, 60 gram cutoff, and 90 gram cutoff grade shells around the mineralization. That identifies a 2 kilometer northwest by southeast trending mineralized body. We have a 10,000 meter program that's designed to infill and expand this, and we believe that that'll be sufficient drilling to put out that maiden resource and PEA by Q1. Again, very excited to see what happens there, especially the deep drilling. I think if we can prove that concept up, it really will go to show investors and everyone alike that we do have that robust system, very similar to what they have at Gatos, which it's a $1 billion company that, again, who's heard of it, right? Like, we're kind of staying under the radar. But yeah, that's about it. That's our focus here. It's a simple story, not a lot of moving parts. Improvements at the mine, continue producing as we are, generating an immense amount of cash to the tune of 13 to 15 million per quarter, and using that money to advance our exploration strategy at Margarita. And that's about it. Yeah.
Any questions from the audience? No? Nobody? if you can give us a quick overview of what we can expect in the next 6 months.
Yeah, so in the next 6 months, ongoing drill results from Margarita. On top of that, we're going to have, at the end of this month, our Q3 financials will come out, and just continual operational metrics from our mine will be ongoing, and then leading into the end of this year, maiden resource and PEA Q1 of next year.
And what's the current cash position? You just closed the placement, right?
No, we did not do. We did a convertible debenture, and we've got 8 million US, so 10 million Canadian in treasury.
Okay. Thanks, Amandip.
Yeah.
Any of the GT Gold investors or other people involved? I know you were at GT Gold.
Yeah. So as shareholders, not as part of management.
I'm surprised you haven't mentioned that more because that's been a huge success. So congratulations, well done.
Thank you so much. But hopefully this is a lather, rinse, and repeat situation where, what was that, 3 years? So 3 years down the road, maybe Magna Gold will be no more. So why don't we buy the stock now before we get bought?
You've heard it.
You heard it here first, guys.
Thanks, Amandip.